Welcome to TradeTheNBI.com. This report is for, the 20th of June. And, let's just start here with the Dow. Take a look at that. We had a very tumultuous day the other day. I know we probably moved all of 3 or 4 points total. It was scary crazy. Let's go over to the NASDAQ here as we scroll through the numbers. It's still a healthy mixed bag. And we'll flip over to the S&P. And for some of the high flyers. Not a whole lot to add to the general commentary. The reality is that we've extended ourselves a little bit. It may take some time to move across a little bit as we just absorb some of this. Obviously, there's vulnerability in, some kind of unusual event, but nothing is suggesting that any of that is of prominent concern at this particular point. Government continues to spend. Gridlock prevents anything from happening. That's generally bullish when you have those kinds of situations. Moving over to the daily chart, we can see there's the overbought with the positive extremes and steel dipping lower, but we've had the green and red taking over the load, as well as just a comfortable cyan moving below. This should present a little bit more bearishness when you have that steel dip below, particularly if we get any fading in the green and red. We may begin to start to see our little bit of retraces. I know that we're still looking at, from our daily standpoint, we had the Iron Hawk take a victory. Starhawk came in right at that particular point. Doesn't mean it isn't going to take a week or more for that to reach its final conclusion, because on the daily it takes a lot longer than it does when we're talking about some of these intraday. And you can see the intraday stops moving up already, so locking in part of those returns, which is beautiful stuff. Can't ask for anything more than that. From an intraday standpoint, you can see it was just pretty much a battle. We came, retested the lows, dipped down nicely, and then once we broke back above the previous highs, we took off for the remainder part of the end of day. Wasn't horrible, wasn't great. It was just choppy Wednesday. That's about the easiest description for it. Is why the name comes around, because that's kind of what happens as you wait for some of the final weekend data to come through and give you your unemployment and everything else, just to see if there's a reason to do something spectacular. NQ, still okay. No objections there. The YM had been the weakest one of the group, and now about to meet its point right here as the cyan green meet each other. We've had rising red. All those things are good, except for the red now has moved below the white. We would expect the white to start to roll over there. And if we see an immediate pivot up of cyan and or green going lower, even steel dipping below here, and it's very close to doing so, I think we see a little bit more, not bearishness as much as just filling in. It's probably a better way to describe it. Bonds having been in a deep red there, we had a little brief move, popped back up on a spider, and then pulled an inverted setup there as we couldn't break through into a new zone for the red. Just beginning, but now it gives us a peak there, so we'll be able to see the next move going. Likewise with the lower green, pivot above the next green will give us the next indication of when there's a buy opportunity. But retesting the lows is what we're looking for, and doing so on a higher extreme. Potentially better move. Oil holding up because it's nice with the way that configuration is. A little bit of bearish setup with the cyan above the green, but the reality is you still have cyan well below red white, so that's going to have to shift before there's any major change in that. And so could still be off a little bit before fade there. As much as I love the orange dot, we love the cyan candle. Gapped above that. On futures, it was pretty easy to follow, but a little bit harder when you're trading the individual one. But nice move because we had the dip here. We had improved, got the nice pivot up from the previous day off of the higher extreme histogram at a higher node. Does it mean we won't retest this setup? That's pretty big extreme. Yes, it created this massive move all at the start of it. I think it probably fills in, but it's right on the money with the buy dot as well as the cyan candle. Very effective. You're going to love those. Euro not doing anything in particular. In fact, the rising red is keeping it pretty much holding on to where it is, but you could just as easily see spider develop here as the green fades below, and that I would just begin to watch for that. We've got just this positive extreme that came in right here. Low hasn't been tested since like 135. Worth noting, nothing special on the horizon as far as breakout from that move. If we'd had to have the steel dip below and come back above, then I'd be a little bit more interested. Nothing harmful or surprising about AIG. It's doing what it's supposed to do. We'd had a nice move from X off of the rising red, and it continues to rise within that channel. No objections to any of that. You're starting to see some lower peaks. The third one, though, this will be in the divergent category, promoting the higher move. And once we talked about the green breaking past this high, continues. And so that's exactly where you get your follow through. Kind of easy to see when it comes together like that. Finally, a meeting for CLF. This will be interesting because we've got this big gap for all this time. Finally, now meeting, about to break into a new zone. I would expect that that should start to carry it through into a new breakout. It's been lagging compared to our other materials. WLT had made a nice pop all the way back when we saw it dip down over here. Whoa, there it went too far. I got it back for us. We had dipped down with the steel, having been above for so long, and finally it was right about over here where it came down, crossed the green, and then it was a matter of just waiting for that, and that began this nice cycle of normal behavior as opposed to the abnormal behavior that we had been seeing before there. And so it's always relevant because it sort of points out the differences between those kind of setups. Quick look at our friend GCP coming off of the buy signals that set up in there. We had a couple of them develop and held up pretty well, even as it attempted to make the retrace on the positive extreme from over here, but that steel stayed in the safety zone, just kind of fluctuating back and forth, prepping for a new buy setup here. In fact, the green just popped above it here, so I would look for that to begin to already have consolidated its move and start to move back up to the high side. We'll look at a couple of these. We had no issues with Apple, though it is in the red, so we're not looking for it to do a whole lot of anything, but it's going to produce a nice buy on the steel break above, and then a pivot of the green. Should be good when that takes place. Amazon still fighting. It's been back and forth with buy, sell. A lot of weakness built into it. The intraday has been pretty accurate with capturing it. It's just fluctuating back and forth, and it's just maintaining just pretty much flat line. I mean, we still have this positive extreme here to retest down at 308. That will be when the market decides to give a little bit more of a sell signal. Right now, the bullishness is generally holding it up. Baidu had crossed over there, still in the safety zone, so we're not expecting too big a decline from this overall setup. Just now going to be looking for higher pivot, so steel moving above that point, or even red's about to make, well, red did make the higher pivot there. So just to turn up in any of those, and it's ready to go, so be looking to buy in that setup as opposed to the opposite direction. FAS still holding on, everything looking okay. In fact, back to have the cyan dip below, that would be positive. Facebook didn't do a whole lot of anything, and it's just been in the chops and starting to break out now. This is a little bit more of a negative move from the green in that, but then we're just looking for red to break above. And what did we talk about before? It was like right over here at the peak. Negative 264 looks to be the high side. So you're negative 224. So it's already now moved above that. So we should start to see some residual power took place for Facebook. They had an issue with an outage or something. Google looking to try and give a buy. The problem with this one is that coming off that deep red, the green not getting above is a warning because there's a slight tick down on that, and we would expect that's going to retest the lows. So this has got to continue. So I'd be following my intraday signals pretty closely there. Netflix had been a dream for quite some time. Still a little bit of weakness on that drop off of the steel below sign, but still no trouble there, just normal behavior. PCLN had turned around a little bit coming forward there. Going to be without any red movement here. I'm going to be looking for that to retrace and come back to the buy, but we have the decent buy on there, and it's continued to go up. You just have to play it a little bit tighter because it is a pretty weak signal. Tesla had the nice breakout from that yellow buy signal back over there. Very overbought, so a lot of that's going to have to backfill, or we're going to have to see just a continuation straight up. But looks good, even at this particular point. Twitter had just been a nice, steady, even move. In fact, it's about to reach that 0 zone, so it's very close here. Pivot lower would be not healthy. That would be suggesting a pretty decent pullback. I would think at least 50% of this major up move. So, all in all, been a great week for our setups. Continues to look good. Kind of boring, but we're on the right side of the directional move, so it's all we can really work on, and we just maintain our stops and go from there. So as always, continue to look for me in private Twitter feed, Stock Twits, and enjoy the solstice. Take care.